4. We'll get started. Okay, welcome. Good afternoon, Australia, and good morning, India. A very warm welcome to the Newland Global Group's Australia-India webinar series. The theme of this edition is Australia-India opportunities in the critical minerals sector. We're proud to have partnered in this edition with the Government of India's Consulate of Sydney and delighted to be supported by Cobalt Blue Holdings. In 2019, the Australian government had released the Critical Minerals Strategy, which positions Australia as a world powerhouse in critical minerals. In June this year, Australia and India signed a Memorandum of Understanding where both countries will explore opportunities to increase trade, investment, and research and development in the critical minerals sector. In this webinar, our distinguished panel guests will explore India's need for critical minerals in the new energy economy, Australia's strength in the critical minerals sector, key ways in which Australian critical minerals sector can interact with India, exploring investments and partnerships, growth and collaboration opportunities for Australia as India begins to transition to its green technologies. This webinar will identify opportunities between Australia and India in the critical minerals sector. Our first speaker is Mr. Manish Gupta. He is a career diplomat and a member of the Indian Foreign Services since 1998. During a diplomatic career spanning over 20 years, he has held various positions in New Delhi and abroad and has extensive experience in dealing with multilateral issues. Prior to assuming his current responsibilities, he served in the Ministry of External Affairs as Joint Secretary for Overseas Indian Affairs, overseeing migration and mobility, immigration policy, labor and manpower cooperation, skills development initiatives, and welfare and protection of overseas Indians related matters. He was also CEO of the India Centre for Migration, which is a think tank from the Ministry on matters relating to international migration. Earlier, he served as Consul General to India in Istanbul, Turkey, and in the permanent mission of India to the United Nations in New York. His other diplomatic assignments were Dhaka and Brussels. I now invite the Consul General of Sydney, Mr. Manish Gupta, for his introductory remarks.
Many thanks, Deepen. Good morning, everyone, to friends from India, and good afternoon to our friends from Australia. It's always a delight, Deepen, to join the Newland Global Group. And many thanks to Cobalt Blue also for partnering with us. This webinar on critical mineral sector, in fact, is a very important aspect of our strategic partnership. It's indeed a pleasure to see eminent panelists from Australia and India joining us today, because they represent not only the government, but also the business and industry. When it comes to India-Australia relations, it goes without saying it's natural partnership. It is based on our shared values and interests. This is underpinned by our democratic ethos and dynamic economies, which have resounding complementarities. As Deepen was saying, the June 4 virtual summit was an important milestone. It's also a testament to our steady transformation of our bilateral ties. In less than a decade, our relationship has gone from a strategic partnership to comprehensive strategic partnership, meaning thereby we cover the entire gamut of relations that we can think as part of a bilateral relations between two countries. Our Prime Minister Modi's vision of Sagar, the security and growth for all in the Indo-Pacific, that virtually sums up the essence of this relationship. During the virtual summit, the MOU and cooperation in field of mining and processing of critical and strategic minerals was signed. Basically, it is aimed at ways to increase bilateral trade, investment, and research and development in critical minerals between both the countries. As we all know, critical minerals, rare earths, they form the backbone of modern advanced manufacturing. And India is focusing on building a self-reliant economy and strengthening our domestic manufacturing sector. In Prime Minister Modi's vision of Atmanirbhar Bharat, building a self-reliant economy, is not all about strengthening India's own manufacturing capacities, but it is also India contributing to the global good for the welfare and well-being of people all over the world. The reinvigoration of our domestic manufacturing in defense, aerospace, electronics, health tech goals, our vision for having 100% electric mobility by 2030. Renewable energy, we have a target of reaching 450 gigawatts by 2030. And the pace by which that things are happening in India, I won't be surprised, probably we surpass even that. Because in next 2 years, India will be almost touching 220 gigawatts in renewable energies. It's way ahead of the targets the government set up for itself. When it comes to critical minerals, there's a lot of work that has happened within the Indian landscape also. The government has set up an important agency. We call it KABIL, Khanij Videsh India Limited, which brings our public sector enterprises in this field on a common platform. Strategic mapping of our critical and rare earth minerals has been done. Australia, as we all know, is the second largest producers of rare earths in the world. One thing probably is not that well known, India has almost 1/5 of the rare earth reserves in the world, which are largely untapped. So there's a plethora of opportunities. In our side, we have identified lithium, cobalt, tungsten, selenium, including 12 minerals as the strategic ones, where KABIL is focusing on. In fact, last year, there was a big delegation for the Indian Ministry of Mines, which visited here. So what in the present context, as the pandemic has indicated, the resilience of global supply chains, I think, is very, very critical. In fact, this is a thing which is in sharp focus among all the like-minded countries. Australia, being one of the world leading expertise in resource extraction and processing, high-tech engineering and renewable research, those capacities of Australia can find a market in India as we, in our quest, as we facilitate our own domestic production in this critical field. The research collaboration between the universities in India and Australia could also be an important factor as we move forward. Companies, both here in Australia and India, could look forward to consider investing, developing a new critical materials network for the benefit of both sides. In fact, the Australian mining assets, mining companies may evaluate entering into offtake arrangements in India, investments, and vice versa. And as we move forward, our diaspora, the Indian-Australian community, could be an important asset that we can probably harness. It's a big professional community with a lot of international students, also the numbers nearing almost nearly 100,000. So thank you very much for your patience. I look forward to a very enriching discussion today. And as I said in the beginning, we look forward to your views, your suggestions, your comments, your observations, which can make an important contribution in advancing this partnership. Thank you. Deepen, you're muted.
So my apologies. Thank you, Mr. Gupta. Our next speaker is Ms. Jessica Robinson, who has been the head of the Australian Government's Critical Minerals Facilitation Office since its establishment in January 2020. Prior to taking on the role, Jessica helped lead a Prime Minister and Cabinet task force on critical minerals and critical technologies. Jessica has worked across the Australian government in various departments, including Treasury and the Attorney General's Department, and has significant policy experience across topics such as foreign investment, critical infrastructure, and cyber policy, as well as performing general counsel roles in 2 royal commissions. She is a lawyer by training and started her career in private legal practice. In this new role, Jessica is bringing her passion and enthusiasm to growing the critical minerals sector in Australia, including by encouraging opportunities for Australian companies to move downstream. And Jessica is leading a national approach and collaborating with all levels of government, regulators, industry, academia, and domestic and international investors. Jessica, over to you.
Thank you very much for that introduction. It's always a bit awkward listening to the description of yourself, but thank you very much for that. And thank you, Mr. Gupta, for such a wonderful outline of the strength, the relationship between Australia and India, which is really going from strength to strength, and particularly in the critical minerals sector. I think it's going to be an absolute pillar of the relationship. So thank you. I was proposing to share with everyone some slides. I'm going to see how that goes because we haven't tested it. And if it doesn't work, then you can just look at my face. But let's see if I can get this working. No, possibly not. Okay, we'll just go back. You can just have a look at my face then, sorry. And what I'll do for the organisers is send through, if you've got the slide pack, if you can distribute that, that'll just provide a little bit of the detail that I won't go through in the time frame we've got today around some of the critical minerals potential in Australia, obviously. So first of all, thanks very much everyone for bringing this panel together. It's a really important opportunity, both from the government to government perspective, but obviously very important in terms of bringing our 2 private sectors together, given the natural alignment in our interests.
Jessica, do you want to give it another try?
Sure, let me give it a go.
Not working.
I don't think it's going to work. What I'll do is I'll speak, and if people, it's not too distracting, my EA may try to do some things in the background. So I'll keep speaking and then we'll see if we can get them up at the same time. Okay, so countries around the world have obviously looked at what minerals are essential to their economic and national security, but are vulnerable to disruptions in supply. And as mentioned by Mr. Gupta, we in Australia obviously have a public-facing critical minerals strategy, which sets out what we see are the economic, what's the resource potential in Australia for some of these critical minerals, and in particular, where we're able to potentially provide a secure source of supply to countries such as in India, EU, US. We can go through the list of who needs critical minerals at the moment. So for all of us that have been in the critical minerals business for a while, we know that these supply chains are at risk of disruption, and that's the reason. I guess, that there's such a high level of collaboration at the moment between governments as well as the commercial sector, and that's really important. Because the nature of the supply chains for many of these critical minerals are highly concentrated in geographical locations. They're opaque with thin markets and often subject to price volatility. Not all of the minerals supply chains are facing the same issues, but that is a bit of a trend that we're seeing. There's obviously increasing demand, and with concentrated supply, there's the increasing risk that we're going to see insufficient supply to meet the projected demand, particularly when we look at the ambitions of countries like India. EU, UK, all looking to develop electric vehicle manufacturing capabilities and really looking to support a transition from traditional commodities into new energy metals that will be important for a new energy transition. So others are going to speak on the panel, I'm sure, a bit more in depth around India's particular demand, but just to, I guess, brush up on the things that we're aware of. We're aware that India's rapid size and rapid growth are going to really require a dedicated source of critical minerals to meet those ambitions around building a manufacturing sector that's looking to achieve defence and space capabilities in particular as part of the Make India program. We're obviously aware of India's ambitious renewable energy and electric vehicle targets, which provide a great source of demand for critical minerals. And as an example, we've looked at the latest World Energy Outlook in 2020, and the International Energy Agency projects that by 2030, India will be the largest market for utility-scale battery storage, which will be a significant achievement due to the large uptake of solar photovoltaics. So in India and Australia, we obviously share a common goal, as Mr. Gupta has already said, about the need for diversified and secure supply chains. Australia, I think, has good credentials in this area. We're able to meet India's needs around looking for not just the raw materials, but potentially the downstream processing capabilities as well. We're one of the most technically advanced, innovative and efficient resource producers in the world. We have obviously world-leading expertise in the met sector, really important as we look to push projects downstream and deliver into the metals capability, or at least into the battery precursor chemicals. We've got a strong record of reliable and sustainable supply, and obviously, importantly, good safety records in terms of our mining production as well. And as well known, I think, an attractive investment destination with Western Australia in particular ranking #1 in the Fraser Institute consistently as the most attractive mining destination. So we've recently, I guess, set out in a bit more detail some of the projects, the mining projects and the critical minerals capability in Australia through the launch of the recent prospectus on critical minerals, which was publicly launched a couple of weeks ago. That really highlights the abundant critical minerals resources that Australia has. And in this particular edition, we've taken it beyond just rare earths, and we really sought to showcase the key critical minerals that projects in Australia, with around 40 investment-ready projects across the country. I was also keen to talk to you about the role of my office in how we're then leveraging our resource potential and then seeking to address some of those supply chain challenges. So as already explained, the office has been set up in January this year. The rationale behind that was an acknowledgement by the Australian government that more effort needed to go into supporting Australia both develop its supply as well as supporting our role in the international arena, working with countries like India to both address some of the supply chain transparency issues and market failures, as well as make sure the demand measures are in place to support new supply come online. So my office has 3 pillars that we're working towards. One is the developing Australia's supply potential with a particular focus on pushing downstream projects. And the reason we're doing that is obviously to target those parts of supply chains that are most concentrated, which tends to be in the midstream processing part of the supply chain. To do this, we've been given an extra 4.4 million in R&D funding, which is being allocated through our 3 national science agencies, so CSIRO, Geoscience Australia, and ANSTO, our nuclear regulator, but also has huge capability in minerals processing. At the moment, some of the flagship activities we have that are on board, we're progressing is the development of an energy metals roadmap by CSIRO, which will provide a blueprint for Australian projects and Australian policymakers around where the downstream potential is and the types of supportive policy and financing arrangements that need to be put in place to develop those projects. We're working obviously very close with projects like Cobalt Blue and the many projects across Australia, particularly in terms of linking them up to our financing vehicles. So Export Finance Australia, NAIF and a Clean Energy Finance Corporation. And at the same time, we're obviously looking to link them up with other foreign government financing mechanisms and the work we'll be doing with Kabil, I think is a really important example of that. And then most importantly, getting the private sectors to come in with offtake and other project finance. We're also doing a lot of work to help facilitate projects move through regulatory approval processes to speed up that and make sure that projects aren't being stranded through long regulatory processes. And we're developing a national roadmap with state and territory governments to look at initiatives such as hubs and precincts, which will bring together, where possible, both federal government and state government spending to support the infrastructure needs, particularly around ensuring that energy, chemical reagents and water are readily available for projects to help them move into downstream processing. On the demand side, we're doing a lot of work with international counterparts, India being a key one, obviously, to help not only drive the private sector investment, as I said, but to create that true partnership on R&D collaboration, opportunities to work on education and skills development across both countries, and to take a truly integrated supply chain approach so that both countries at either end are both supporting their domestic capabilities as well as addressing those challenges in the global supply chain. And then on the improving the market supply, the market side, we're also doing a lot of work with the International Standards Organisation to make sure that the standards that are being put in place to regulate critical minerals and put in governance measures meet the types of requirements that are going to create a level playing field for Australian projects and other projects around the world. So on the important part of the conversation today, which is the MOU that we've signed with India, I think that's going to be a really important opportunity to help bring both governments and the private sector together. There are 4 areas of cooperation under the MOU. Key areas around increased data sharing on trends in demand and supply of critical minerals, and that'll pick up on the work that Mr. Gupta, you've talked about in terms of the analysis that the Indian government's already done on this, and on the other side, the Australian analysis around where we've got potential supply. Then we're also looking at the trade and investment piece and how we can work together to support the private sector, join up at both ends of the supply chain. And we'll be doing some very focused work with Kabil and looking to set up a framework where we can help prioritise parts of the critical mineral supply chain so that we are helping advance India's manufacturing ambitions. A useful starting point is probably going to be a shared supply and demand matching analysis. On a further area, we're looking to collaborate again on that 3rd pillar, which is diversifying supply chains and working together in collective multilateral fora to make sure that the measures are in place globally to support more robust supply chains. So, you know, the part that doesn't often get talked about here, but which is a really important aspect, particularly under this MOU, is how we can link our research institutions, and that's going to be a really important aspect of this. So both in India and in Australia, we have significant national science capability, and bringing together that expertise is going to be really important to manage some of the complexities in the supply chain. So we'll be looking to bring CSIRO into the conversation along with other science agencies. There's also the potential to align projects with funding through the Australia-India Strategic Research Fund, and we'll be looking to see where there are potential linkages between Australian and Indian research universities under this part of the MOU, and in particular, where there are opportunities to support the export of some of the mining education capabilities Australia has and how that can maybe play a role in India. So for the next step, we'll be looking to set up our first joint working group in November, so this month, which is very exciting. And that process will involve agreeing a set of joint actions and prioritising across those 4 broad areas what the next steps will be. So we've talked about the government to government bit. I'm really keen to now talk about and welcome in industry's participation into this process. And in particular, you know, recognising that the government to government collaboration is really about cultivating and incentivising commercial investment. So companies on the Indian and Australian side are already coming together. There are examples where we've got Australian companies that have got Indian investment and offtake and are looking to develop a integrated close approach to supply chains. And we're very keen through my office and through Austrade in Australia and the state governments to help connect Indian businesses with Australian businesses. We have obviously experienced staff through our presence in New Delhi, Mumbai, Kolkata, Chennai, Hyderabad and Bangalore. And the Geoscience Australia teams that sits behind the Australian Minerals organisations also available at any point to help connect you in with state and territory geological services. So thank you very much for your time today, and apologies that I obviously wasn't able to get my slide presentation up. That has on their contact details, and obviously I'd be very keen to hear from people interested to learn a little bit more about the role of my office or obviously opportunities for Australian and India companies to work together. Thank you very much.
Thank you so much, Jessica. That was a really enlightening presentation. You know, the innovative sort of way of putting together this facilitation office and putting together one sector and bringing together all of the actors and key stakeholders into this area led by yourself. I'm looking forward to seeing how this all works, particularly with India, but also from an Australian perspective globally. So congratulations, you've got your work cut out. There's an awful lot there to do, and we're on your side and looking forward to seeing how this all sort of pans out. Thank you. And I will certainly pass on the presentation to everybody that's participated today. Our next speaker is Mr. Tuhin Mukherjee. Mr. Mukherjee is the Managing Director for SL Mining and Industries Limited and Head of Mineral Resources Development at the Aditya Birla Group, which is a $44 billion global conglomerate in the league of the Fortune 500. As business head, Mr. Mukherjee provides strategic leadership to the mineral resources development and mining businesses. Prior to joining the Aditya Birla Group, Mr. Mukherjee was the Executive Director for Mining at JSW Steel Limited. Mr. Mukherjee started his professional career with Coal Mines Authority Limited, now Coal India Limited, a Government of India company. He's also an alumni of the Indian Institute of Technology at Kagapur. Mr. Mukherjee has over 4 decades of experience, including 1.5 decades in corporate leadership roles in the mineral, mining, and associated infrastructure sectors in India, Indonesia, South Africa, Chile, Australia, and USA, and over 5 years in commodities trading, such as petroleum, coal, iron ore, sulfur, fertilizers, etc., as business head in over 78 countries. Mr. Mukherjee is a member of the National Executive Committee of the Federation of Indian Chamber of Commerce and Industry, which is known as FICCI, and also the chair of the FICCI National Mining Committee. He is a member of the National Mining Committee of the Confederation of Indian Industries, CII, and chairman of the Governing Council of the Sustainable Mining Initiative of FIMI. Mr. Mukherjee also represents India in the manufacturing working group of the BRICS Business Council. Over to you, Mr. Mukherjee.
Thank you, Deepen. Am I audible, First of all,
You are indeed.
thank you, Dipen. Greetings to distinguished panelists. To start with, Honorable Consul General Mr. Manish Gupta, and other distinguished panelists, Joe, Jessica, Reno, and all the distinguished participants through the virtual world. And I must thank Dipen and the New Global for arranging this webinar. We understand the topic we have decided, critical mineral sector in Australia-India opportunities. But since me personally been involved with Australia for I don't know how many decades, in late 80s, I'm involved in Australia from the 80s. I feel that Australia-India is one country. The way we talk, the way we speak, we feel that as a one entity, we think and move forward. That is the way I believe. In this background, I think this particular theme today, the critical mineral sector, is quite relevant in today's world. Again, I am thanking to Dipen and New Global. This reminds me way back in history, after World War II. You see that historical data, those days critical minerals were iron and coal and petroleum. Everybody was after looking for iron ore for steel making, coal for generating steam, and petroleum. Then copper came into being. When copper got into a critical mineral, and it still continues to be a critical mineral today, with the copper, lot of byproduct or secondary minerals came out. Cobalt, selenium, bismuth. So that is how the critical minerals started developing from post-Second World War II. And now the Industrial Revolution is going now version 4.0. We ourselves define strategic and critical minerals in another bucket, where some of the countries they have listed 12, like in India, our expert committee has enlisted 12. Some committees have added a couple of more. We are calling it strategic and critical minerals, based on the requirement of today and tomorrow's world. In this background, when you talk about Indo-Australia, friendship, ties, as Honorable Consul General has rightly pointed out, that both the Honorable Prime Minister has signed agreement, MOU, on June 4th, 2020, and subsequently we have elevated to our relationship as a CSP, Comprehensive Strategic Partnership, where this particular topic, that critical minerals, has a very definitive role. We, from the private sector, we are not only excited, that also we are equally excited is that both the country, Australia and India, has their own might in their respective field. Australia, I think Jessica is here, Dipen is now the Australian. He knows much better than what we know, and the Honorable Consul General, who is now piloting India's interest in Sydney. Australia has a robust strength on its own, be it governance, be it regulatory frameworks, be it technology, the skill, and over and above that, they have the resources across the country. Right from, if you look technically, if you speak about a geological condition of Australia, is unique in the world. They have entered variety of minerals because geological setup is such, right from, in the technical term, I'm slightly using some technical term, the sedimentary deposits, metamorphic deposits, igneous deposits, all are there, right from east to west, north to south. And Australia has the luxury, I use the word, of dividing the entire country, of do the mining based on the concept of cluster mining. Like today, because each mineral, when you mine, you got to have a supporting infrastructure so that is sustainable, taking care of the local community environment, and economic growth. Today in Australia, you can comfortably divide into 4 components. The northwest is a total iron ore mining. Northeast or eastern side is a coal mining. Southern part, Australia, is repeatedly either uranium or copper or these so-called critical minerals. Northern Australia is a mixed bag of critical minerals as well as you have iron ore, you have copper. So the bulk cargo like iron core, you need a high-speed bulk infrastructure load-out facilities. Whereas these small minerals, like critical minerals, you need container loads. And these critical minerals has lot of environmental challenges. Normally the sulfide mineral, when you leach it, lot of effluent that creates a challenge to the environment management. So we can cluster, you can identify a cluster where you can define this is the area it is critically made for this sort of mining of these minerals and take care of all the sustainability point of view. So Australia has that luxury of doing cluster of that, a cluster zonation of each mineral. When you come to India, India also has like Eastern India, Southeastern India, and Western Australia. If you say geologically, they're alike. The coal deposits of near the Perth Cooley basins, and in Indian Orissa, Mahanadi, on that coal alike, because they are together in the pre-continental drift time. They are all together at those point of time. So minerals are identical. India also can have a base zone. One cluster is a coal-rich area, one cluster is iron ore-rich area, one is a copper, lead, zinc. So these cluster zonation mapping or development can come one day. That will give the sustainability concept going forward. In this background, both geologically, mining, and technologically, I think both has a lot of similarity which can be driven towards and forwards. So in this background, the critical minerals, the importance of critical minerals, there is no second thought of what are the critical minerals, what are the priority. I think everybody, all of us across the globe, we need those minerals immediately, if not yesterday. Like the way the electrical vehicle has come up and is moving forward, some of the minerals, whether it's manufacturing the component or the battery storage of energies, we need quickly. Now, how both the countries can participate and work together. That's the critical area, what we are now discussing today. Both the countries have equal strength and in their respective field. Today, India has a reach of resources, but untapped, is not yet fully explored. At the same time, I think, let me tell you again, India also, because India is one of the very few countries where the mining history way back in 200 centuries old. There's the copper mining, the gold mining, copper mining in the western state of Rajasthan, way back in the few centuries back. So coal mining in eastern India in 1774, the gold mining, the Kolar near Bangalore. Today, technical term you call slime pond or tailings, the heaps of tailings lying in the Kolar township, if somebody, without mining, if we can process that tailings, we can take enough gold. The entire Kolar township, entire engineering college, golf course, all lying on the old gold tailings. Similar to go to Eastern India, a place called Sukhinda, entire the acres of land is lying on the nickel tailings. You don't need to mine any new mining. Simply process the tailings. Similarly, go to Rajasthan. The old copper slags, tailings, you can get copper. Now, what I'm talking about this, the gold, copper, and nickel, when you process those tailings, you get these critical minerals, lot of critical minerals. And today, copper, nickel continue to be critical minerals. So that's why I will again emphasize today in this forum and that critical mineral doesn't mean those are, well, lithium, strontium, rare earth, they are. Those requirements are today's world, whether it's a smartphone or an iPad or a storage energy, yes, those are very important and we require that. But equally, we require the copper. Copper is the basic, most important critical minerals which required in everywhere, whether it's electrical vehicle, spaceship, anywhere you need copper. Look, we operated 2 mines, copper mine in Australia, one in Mount Gordon in Queensland and Nifty in Western Australia. Now, just I think in 2016, we came out because mine were quite deeper, is going, and it's not economic to take the copper out from that. It's better to buy concentrate in a much economic way, either from Latin America, Chile, Peru, or Indonesia. So the copper continues to be a critical mineral. Now, similarly, nickel is a critical mineral. These are fundamental core mineral which is required for going forward. Now, when you process copper ore, you get bismuth. You get cobalt. So when you are talking about this critical mineral, we have to keep our canvas quite open. Whether we mine for the particular mineral as a mining or as a byproduct. So India today, for Australians, by investment in India, this large slime, what you call technical term, slime or tailings or rejects, whatever terminology you call, both nickel, gold, copper, we have a sprawling area of that rejects. Today, if you come to that area, you'll find the entire township has built up on that. Instead of developing, the Kolar is one of the deepest mine in India. You have to a few kilometers, you have to go down below. Instead, if you can get that that reject, if you can process, you can get so much of gold along with the so-called critical minerals. So this is what India has offered. Over and above, the untapped resources, whether it's rare earth or all those critical minerals, that need to be properly, systematically explored. Entire our beach coastal area is rich in titanium, rutile. Is untapped. So once you take out the entire beach sand, you get titanium. That titanium is, as you all know, it's a very critical mineral because titanium along with alumina is a new age material science. Unfortunately, even today, the research work in both material science and geological earth science is quite restricted. Government of India has taken the lead, both the country, Australia and India. What Honorable Consul General has pointed out, they have signed the agreement. The Educational Institute, whether IIT, ISM, BHU, they are coming out how to bring that sort of attention to the research or skill development or building human capital of that areas. So India has this much of potential of that. And on the other side, Australia, they have is a proven. I'm not going to again repeat the same sentences or same positives or positivity of Australians. They have technology, they have the enough experience and the skilled manpower. So this is the right time that both the countries, they can put their mind together and find a respective field. Which are the areas how we can operate, we can work together, right from as a mining site, what you talk about, exploring in India, mining in India, and make in India. The entire chain that is what India is offering today. And I think the Australian investors, they will definitely get tempted, excited to avail the opportunity. That's what Government of India is offering and has opened up this door to all of us. So this is a critical area we thought that we need to work together and an environment has been created and Government of India is really pushing hard. And so that both sides, they feel comfortable. I think they are comfortable because I have been working with Australians because right now we have we do a lot of trading of fertilizer near Melbourne called Geelong. We are doing trading of fertilizer in Melbourne. we are doing mining in both Queensland and Western Australia. We need to somehow, someone or somehow, like the Australian, just now I heard Jessica pointed out, they're creating a desk to facilitate. Now, what we require that both the countries should sit together, connect the both sides, whether the public sector, whether the private sector or government level. Government level already taken a lead to put together, sit together, identify the specific projects, specific areas, and prepare an action plan. That is what the need right now for all of us. And there, again, I would highlight globally, post-Paris Accord, we are shifting from linear economy to circular economy. What we are circular economy meaning means we are recovering, reusing, recovering, recycling, reusing. So these critical minerals, that's why I started my opening remarks with the rejects. This is the ideal case for Australia and India. Then let us work on that from shifting and helping the world for shifting from linear economy to circular economy. There, the basic theme is recover, recycle, reuse. Wherever there's a rejects, wherever there's a stockpile, wherever there's a slime of the old historical mining belt, that will change from all of us, from going to straight, it will be a circular economy. Recover, recycle, reuse. And critical minerals, strategic minerals are the ideal target for getting into this front. And we feel, because of our mining sector, we always believe that we have to play a very responsible role in society. Like the mining which we handle, our carbon footprint is zero. Whatever energy we consume, we produce renewable energy. I produce 75 megawatt of wind power, 82 megawatt of solar power. So whatever I consume is totally neutral. That's the objective, you know. So that is this. When I'm talking about critical minerals, I will again repeating that, go for circular economy. Do not go for linear economy. With this, my opening remarks. Thank you so much.
That's great. Thank you, Tuin. That's a very good understanding of where we started from, what the opportunities are in India particularly, and also the opportunities for Indian and Australian companies to work together. Very good. Thank you so much, Tuin. I'll move on to our next speaker. He is Mr. Joe Kadravak, who is the Chief Executive Officer and Executive Director of Cobalt Blue Holdings. Joe commenced his career as an RAAF engineering officer before transitioning to PricewaterhouseCoopers, where he was responsible for preparing operational review and examining strategic options across mining, processing, railway and port facilities throughout Australia, North America and Europe. Over the last 20 years, he has held senior roles with Deutsche Bank and Five Oceans Asset Management, and has been involved in equities investment, research focused on mining, minerals processing and energy storage technologies. Most recently, Joe held an international consulting role with a focus on renewable energy and battery storage technologies. Joe has significant experience in managing investments in the global resources and mining processes industries, managing turnaround projects, supporting corporate targets, mergers and divestment activities. Over to you, Joe.
Thank you, Dickon, and as always, a pleasure to be able to introduce ourselves. I'm also quite humbled by the quality of the fellow panelists I'm in front of today, so thank you all. For those I've not met before, my name is Joe Kadravak. I'm the CEO of Cobalt Blue, and in Australian vernacular, g'day. Let me introduce Cobalt Blue and the project to you and then give you some further thoughts. Cobalt Blue is an Australian Securities Exchange listed company, and we listed in 2017. Our core asset is the Broken Hill Cobalt Project, which is an integrated mine refinery located in New South Wales, Australia. We are one of the biggest greenfield cobalt projects in the world, targeting some 17,000 tonne of high-spec cobalt sulfate, effectively a lithium-ion battery precursor product. And we're looking to produce that across approximately 20 years of operating life. To give you some background, and as Tuhin has mentioned earlier, the vast majority of global cobalt is actually a byproduct of copper or nickel. So this makes our project somewhat unique because its revenue split is approximately 80% cobalt and 20% byproduct. Our strategy for the Broken Hill Cobalt project is to produce both an intermediate mixed hydroxide product, which can be refined into a final high purity battery ready cobalt sulfate. There is potential for the MHP to be refined on-site or off-site, and we are exploring opportunities to participate in the battery value chain and co-locating this refining. COB is currently building a pilot plant with first operations in February next year to test our overall processing. The pilot plant will allow us to produce various specifications of these products and represents a significant milestone for our business. We remain on target for a bankable feasibility study in later 2022, along with approvals and financing for an investment decision. In short, the Broken Hill Cobalt project is a globally significant, long life, low cost supplier of battery ready cobalt. We estimate that the project can supply over 5 million large scale fully battery electric vehicles over its life. The project will also allow us to bypass the existing refining complex of East Asia and supply the battery industry directly. Some thoughts on critical materials in Australia. Australia is a significant producer of key battery critical materials, including lithium, nickel, cobalt, and manganese. Our resource endowment in general greatly eclipses our overall production in these metals. For example, in my field of cobalt, we possess 16% of the global endowment or resource, but only produce as a nation some 6% of global supply. The Commonwealth and state governments are working together with forward-thinking Australian juniors such as Cobalt Blue. We are part of a Commonwealth Government CRC scheme whereby COB has received funding to develop its innovative metals processing, which we can use to extract both copper and cobalt from significant endowments in South Australia, New South Wales, and Queensland. We've also been part of the Commonwealth Future Battery Industry CRC scheme, with our particular interest in working cooperatively with others, particularly major companies like BHP and IGO, to assess the viability of making battery precursors in Australia. The value add of that is significant, allowing us miners to realise metal parity at the revenue line for all of our product suite. The more recent establishment of the Critical Minerals Facilitation Office run by Jessica is also a very, very useful step in the right direction. Some investment trends in the sector. The numbers in batteries are simply staggering. The upstream battery materials space needs some $70 billion USD in direct investment in order to support the downstream. Downstream, electric vehicle OEMs have committed capital of upwards of US $500 billion to be deployed between now and 2025. The problem for us, or the limitation for us, is that banks simply don't know how to lend to our sector. Lithium and cobalt, in particular, are not terminally traded. They are company-to-company commodities where hedging is difficult, if not impossible. This typically lies outside of most bank risk profiles, forcing mine development into the arms of second and third tier lenders. The recent failure of a high-profile Australian lithium producer is testimony to some of the onerous debt that's forced on juniors as we are forced to go into lenders of last resort. The issue for batteries is that the production chain is somewhat disintermediated by fragmented processing at the precursor and cathode stage. Precursors represent a fairly low margin, just-in-time style manufacturing, but does not adequately support long-term pricing to the upstream. This frustration is now being felt by some of the major EV producers in the world, including Toyota, BMW, and Tesla, who have recently begun dealing directly with minerals processors in order to gain security of future supply. Some thoughts on the Australia-India relationship. Simply put, we need partnerships that meet in the middle. Indians are excellent at manufacturing and have world-class manufacturing capabilities, but currently have relatively modest battery presence, particularly in the cell to battery pack segment. By sharing a vision, both countries can integrate at a national level for the production of these critical materials. For example, in cobalt and nickel markets, there's no reason the Aussies cannot make sulfates or even precursors for the Indians then to convert to battery packs supporting electric vehicles and energy storage devices. In other words, we should be able to keep the economic margin between the two countries whilst being able to highly customise product specification in what are hugely evolving markets. In summary, I look forward to our discussions with Indian businesses to understand how we can work together towards a decarbonised future. And as a final thought, I look forward to our upcoming summer of cricket. The gloves will come off. Thank you.
Thank you, Joe. Appreciate that. There's definitely an opportunity for collaboration there with Australian companies producing the cathode that's required for Indian businesses to manufacture. We'll move on to our last presenter, by all means, not the least. I would like to invite Mr. Rino Raj, who is presently the Chief Operating Officer of the energy and battery business at Tata Chemicals. He's been associated with the company for over 3 years, an alumnus of IIT Bombay and IIM Ahmedabad. Mr. Raj joined the Tata Group in 1996 and has worked with multiple companies within Tata Industries, TACO and Tata Sons. Currently, he is responsible for setting up new ventures in the area of energy sciences, leveraging advanced battery technologies and the emerging trends in e-mobility and clean energy. His past assignments have ranged from setting up over 20 joint ventures with global technology leaders, driving digital transformation as Chief Information and Digital Officer, pursuing mergers and acquisitions in multiple geographies, redesigning organizations in multiple Tata companies, to working on strategy and board interventions for the group chairman at Tata & Son. Rino, welcome, and over to you.
Thanks a lot, Deepak. Hello, everyone. I'm glad to be here with the other panelists to add to this very interesting set of observations and thoughts that we've been having on critical energy materials in the context of India and Australia. Just to set to rest my thoughts on the demand and how things are growing in the market itself, I find that people almost everywhere are driving towards cleaner forms of energy. And this direction is something that I feel is unchangeable. The pace of how fast individual countries may go towards that may change, but this is a direction which we believe that is something which is set almost in stone. In addition, as energy storage technologies are becoming more familiar and affordable, we see increased usage and more applications coming up. And this is actually building a very reinforcing and positive growth cycle. As far as battery technology, particularly lithium technology is concerned, lithium-ion technology is concerned, it has made its mark indelibly in portable electronics, and that's something that we have seen in the last 2 decades. More recently, it is also evident that EVs have captured the world's imagination, whether we speak of the West, where the top-of-the-line EVs are attracting customers, and in other parts of the world where governments are using regulation and policy quite successfully to drive markets and supplies towards electric mobility. And even more promising to me is some of the things that I see in India, where, let us say, we are seeing completely new segments emerging and embracing electric mobility driven purely by utility. And these are small applications which used to be done by either human effort or through IC engines. In the stationary side, again, driven by increasing appeal of renewable energy, which is gradually coming in. We see that the fluctuating nature of that energy source itself is such that we do require energy storage. Multiple energy technologies are there in terms of managing the storage, all the way up from pumped hydro, and we have tried many of these things. We have seen how successful they are, but it is also clear that beyond a certain scale, economics may drive the direction completely in the direction of maybe one or two dominant technologies. And we see lithium-ion being a front runner in this sector as well. Coming closer to India, our government, as has been noted by many speakers today, has been very proactive in setting the direction for electrification. And I would say there has been a very holistic approach involving multiple stakeholders within the country as well as outside as well. There are very comprehensive plans across government spending, central and state level policies, and even plans to promote domestic manufacturing in a very comprehensive manner. So these are all steps that we are looking forward to seeing roll out in the coming years. If I speak of Indian demand and appetite, I would say at first that India is a few years behind many other leading countries in electrification. However, the pace at which the penetration is happening is being very promising. As I mentioned, there have been entirely new segments which have come up in a very short time, which are already numbering in millions. I also see a lot of vehicle OEMs, including traditional ones and small 2- and 3-wheeler startups, fueling the market with completely new products, offerings, and new business models are being tried out, including battery leasing and swapping, etc., to tackle specific issues. So we are seeing the very early stages, I would say, in terms of the business models as well as what are the kinds of technologies and solutions which will emerge. We are also seeing some of the challenges which are particularly this year, as we saw the pandemic, which delayed consumers, delayed supply chains, and also transportation collaboration discussions. But hopefully we'll be out of that in a period of time. There are also a few, I would say, medium-term structural issues that we see, mainly around the need for a much larger charging infrastructure, which is growing at a pace, but I think it will take some more time before it becomes significant. And there is a lot of consumer anxiety based on new technology and limited experience. But again, I would qualify that these medium-term issues are expected to vanish with time and experience of more EVs in the field. So to that extent, I would say that while the initial few years that we see ahead may have its own challenges, we do see these things being taken care of in coming years. Given the early stage of the market that I described, and which all of us are aware of, including people experimenting with multiple technologies, projections of future demand of lithium-ion battery, if I look at that as a technology, this varies considerably. However, I would say that most of the estimates are in very significant 3-digit gigawatt-hour scales for energy storage in using lithium-ion batteries. And that scale is we see as a very significant and a sustainable number, which can promote the growth of a robust manufacturing ecosystem in the country itself, covering batteries, cell manufacturing, even active materials being produced locally. Along with recycling, this actually has the potential of making a very sustainable and circular ecosystem, which is the dream for the future. Of course, in this cycle, I would say the main structural issue which could be persistent is the lack of viable sources for select materials which are critical for contemporary lithium-ion technologies. This is not a situation which is uncommon across the globe, but let us say this includes particularly lithium and cobalt, which is critical to most of today's battery chemistries, in addition to also a few other materials like nickel and manganese. This all the more underlines the reason why we have to have very strong relationships for sourcing, as well as joint R&D for better precursors and future materials in these areas. I would say that if this particular element is filled in, that completes the very sustainable and robust picture for India's battery industry in the future with a comprehensive ecosystem. Now, of course, in addition, I do see that many of these countries, India included, will also pursue technologies which may end up using lesser of some of these materials or even none of these materials. But as we all know, there is a front runner, which is lithium-ion technology, and that momentum may carry itself to a scale at which the other technologies may fall far short of. So this is again an area which we are studying, and I think in India we will continue to work on. With as I mentioned, the major driver at this particular point in time we see in the future is e-mobility. That said, if I look at last year numbers or what has been happening in the recent past, the dominant species is still consumer electronics, followed by a fairly significant amount of stationary projects, and e-mobility is in early stages, which we expect to overtake the other technologies fairly fast. In terms of utility scale storage, we do see that there are things which still need to be done in the country, including supporting policies and regulations, also financing structures, because many of these projects have fairly complex requirements for financing. But that said, I think, again, these are elements which can be put in place very easily, and both industry and governments, our government has shown sufficient amount of interest in terms of tackling these issues head on. So this is, and we see significant projects where lithium-ion battery technologies, including alternate ones, are being tried out in utility scale. And this is again something that we see as a significant market going forward as well. We are observing and I would say watching very closely Australia's experiences with the renewable energy and storage technologies, particularly in South Australia, also in some of the smaller projects that we see. I am completely convinced that sharing notes, collaborating in several areas that we see of mutual interest at both national, industry, and also individual projects between companies, this is the way forward, and this is the path for success for both India and Australia. And I, for one, certainly look forward to working on this path together with colleagues in Australia. Thank you very much.
Thank you very much, Reno, for that presentation. It's reassuring to know that you know, a company like Tata Chemicals is watching Australia at every level and the work that is being done here. Thank you for that. We are over time, unfortunately, so we may not get, or we won't get a chance for the Q&A. I would like to just end very, very quickly on a quick note. You know, what is really important here today is there are two things. One is the need and one is the will. And if you look at the need, India has a need for energy security, has a need for critical minerals, and Australia has the will. Of course, there are opportunities for Australia to also, you know, provide skill sets and technology in the area of mining in India itself. But there is definitely a need and a will, and both countries, particularly both prime ministers, have come together earlier this year and committed to that. MOUs have been signed. We can see the presence of both governments here in this seminar and webinar today. We see, you know, multinational Indian companies represented today, and we see miners from Australia represented today. So there is, you know, good collaboration already started, and we hope that through this dialogue that we can take it a lot further with the foundation that we've created. On that note, I'd like to thank Mr. Manish Gupta, our Consul General. Joe and Cobalt Blue, thank you for partnering with us today and your support. Tuhin Mukherjee, thank you so much for your presence today. Reno Raj, thank you so much. And of course, Jessica Robinson, thank you so much for participating today. All of you have a wonderful day that's left here in India and this afternoon here in Australia, and we'll look forward to coming together again soon. Bye-bye for now.
Thank you. Bye-bye.
Thank you. Bye. Bye.
Bye.